Hey everyone, this is Nick, and it is 12/22, almost Christmas. The week it's got one more day in it, and then one more week, and then it's 2022. What? All right. Palantir was a request, a stock I like fundamentally. So whenever I want to, let's say I come to it blind, and I say, okay, is this a good time to get long Palantir? The question is, it depends on your time frame. Overall, yes, it is not a bad time to start, and I'll back into the reason how I got to it. Shorter term, if you're active trader and you're trying to scalp a few trades here and there, you need to be in a live trading room like ours, or just at least know how to read a 5-minute chart, for example. Depends on the speed of your trade. As far as shorter term, maybe it is, maybe it isn't. So the clear statement on shorter term is the bears have it. They sell pops, and that's why it's going this way. It's a descending trend. A little bit long term, it was a fight sideways, but now of late it's in the hands of the bears. Technically, I can eyeball some sort of a neckline here or here, and this could have been the satisfaction of that. So there are some good news there. But first, the macroeconomic conditions. The economy is too healthy, and that's why the Fed is trying to back it off a little bit. So there are no problems economically. The potential problem is the Fed in 2018. They tried to tighten, and they caused a crash. This is not exactly the same timing, even though it's almost 2 years, the exact moment when we crashed into December of 2018. Because 3 years? Yeah, because at the time, they had already finished the taper and started tightening. They were raising rates and selling assets. So they haven't even started those two things. In fact, they haven't even finished the taper. They're still in the middle of the taper, which is less QE, still QE, not QT yet. So that moment will probably come in maybe next August, in my opinion. If we finish the taper by March, they talk about raising rates, and then they raise rate, and then they talk about selling assets. I think it's going to be backwards. They sell assets before they even try to raise rates. Anyway, point is, no problems from the economy. However, the stock market is too high, and it could correct. And if it does correct, everything I say today, you can re-say, 10% lower in Palantir. On its own, it will do well from this point on. So is this a buying point? I don't know. I don't see enough history. You remember I say look left. So I look left. Oh, okay. So this is a valid entry point from the chart perspective. So I say no trade, no thesis, no trade, or no trigger, no trade. In this case, it's two. Actually, it's one. I have a thesis that, first of all, fundamentally, there's nothing wrong. So therefore, I'm looking for places to buy. And the actual thesis revolves around the fact that I have proven support. So I can make the assumption that this support will hold until I'm wrong. So when do I get out? So now I have a thesis. So I know to stop out if I'm wrong. How am I wrong? If A, alert if it goes below the lows that it just made, or B, below the low that got me into it, which was the earnings from the other day. So losing 17 would be a highly disappointing development, and would say that your thesis, friend, was wrong, because that did not hold. I don't know what's below here yet, so I'll go check in a second. All right, so this is the thesis. Yes, I can get long if I'm a swing trader opportunity. The upside is tremendous because of how fast this stock moves. The problem is it's stuck inside this sell small caps, sell ARK stocks, sell Cathy stocks, sell meme stocks. And this one doesn't belong in all of those. Technically, it is a small cap, but it's stuck there. So PayPal is stuck there too. A whole bunch of great companies are stuck there with the meme. So be careful. On its own, it should revert higher. If the stock market holds up, it should revert higher. As an investment, this is a good starting point. As a trade, swing starting point, yes, but a actual short-term, like 2-day trade or 1-day trade or scalp intraday, you need more granularity. We'll get there in a second. But first, let's zoom out. So how does this look in the bigger scheme of things? So this is a relatively new company to Wall Street. It's not new. I think they started like 2011. Double check that date, but I'm pretty sure it's been there for a while. The principals, the people that lead the company sound great. And the first time I wanted to get long, and I have lines down here. So it was like 9 or 10, and I have, let me see if you can see them. They're right there. See them? So, and then I didn't even think it was going to be all of that rage with the GME crap. This was a disservice to this company, that spike. Exhausted the buyers for a long time. All right, so this gives me overall picture. That's the assumption I went on. You see that orange line that says start looking to add more stock. I am long right now. So if I say I get long, when I have a thesis that I have support, the best way to get long is to sell puts or put spreads below support. This way I don't even need a rally. I just need support to hold and I win. The second best is to buy a call spread. Buying shares for the long term works, then you eliminate the time factor. Any which way you try, I would not go all in because we don't know if this is a bottom for the market. If the market's correct 10%, this one will break through and will be under 16. No doubt. It was under 10 just over a year ago. It's doable. It's feasible. You don't know. If you haven't been trading a long time, then this seems impossible, but trust me, it's not. All right, so now we know that it is a decent place to swing trade up from here. There's going to be problem levels on the way up. Oh my God. Okay, so 21 and change is a problem. The area around 22.9 is a problem. Let's round to 23. Now the biggest problem is this one, 2470. This orange line I did not draw. This is the highest point of volume for its life. That one, by far. These are the 2 second highest around it. So what does that tell me? It tells me that from here to here, it's not going to be easy. If this bounce rushes into that and you start your longs going into 23, you're too late. Not because you can't make more money, because this is where it's going to get a lot tougher. Getting to here and getting through here are going to be different. Okay. Now, what if I'm an active trader? Then I should go down to a 5-minute chart. This is today's action, and it speaks volume. Like tomorrow, Thursday, immediately there's danger if you lose 18.6. Then you are liable to get to 18.3, maybe even 18.10. That's for tomorrow. Conversely, you have a big problem at 19.10 and an even bigger problem at 19.4. But every problem, it then becomes a trigger for another level up. So that is on the 5-minute chart. Then if you want to get more perspective, you go to 15 and you say, okay, what if I beat this problem? Nick said it would be an opportunity. Yes, you beat that level tomorrow or by Monday, then you have an opportunity of about $1.20 from there. I'm eyeballing that, so don't hold me to it. So if it goes above 19.4, it's going to be 20.6-ish, 20.8 available. So that doesn't mean it makes a beeline for it, but if it does take that out, it can target here. However, you need to look left, and everything from here on out is going to be a slog. So it will pop, fade, come back, try to fight it, and try to finish. All right, so that is step 1. So step 1, hold the floor. Step 2, beat this guy. Step 3, try to beat that guy. And if you do, then you target this, and then you're going to have to fight it out here. That's the plan for tomorrow for Palantir. Meanwhile, long term, fundamentals, we're backing into it. How about this? There are no fundamental reasons to short or expect lower prices from here if the stock market is higher in the future. Revenue is on a good clip growth. Gross profit is 1.1 billion with about 25 bump in the next year, I think, expectations. It still loses money. Who the heck cares? It's supposed to lose money, remember, Amazon. So let me look at the quarterly to see if there's a good trend. 220, 230, 252, 289, 322, 341, 375. You get the idea? 392 on a yearly run rate of 1.4 billion with another bump of 24 billion or so that they booked business but not profits yet. So this is anticipated incremental business on a run rate. Statistically speaking, there's only the price to sale to look at. It's 26. It's not dirt cheap, which means if I buy shares right now, I'm giving them credit for 26 years worth of business. It's not crazy. That's slightly more than Tesla last time I checked. But that number normalizes, which means that, okay, I'm paying for that now. But if they grow the sales, suddenly the metric normalizes because it's price of the stock divided by sales. So if I grow the sales and price at a faster clip than the price is, then it normalizes. Perfect example was Zoom. I was a critic of it when it was going to the moon. Remember the stock went ballistic during the pandemic. I said, whoa, price to sales is like 130. So that means I'm giving it credit for 130 years worth of full year sales. But now it's under 25, maybe under 20, because they grew the business. So they normalized the metric. So it's not an alarm. All this is to say, business is great. Company's good. They just need time to build kudos on Wall Street. That's it. More kudos on Wall Street. That's it, folks. 10 minutes on the money. Palantir. Nothing here is a trade recommendation. I just shared the levels, by the way. I'll see you in the live trading room if you are part of it.